across the region for his regular engagement. Admittedly, not so much in person over the last year, but hopefully that will change as we come out of this brutal year that we've been experiencing. And then finally, we'll hear from Pushkala Rattan, who's the regional lead, Climate Finance Asia, Financial Institutions Group, one of the three pillars of the IFC, of the International Finance Corporation, which, as you, I'm sure, all know, is an important part, the commercial side of the World Bank Group, and famous for issuing their own green bonds. I want to play a special tribute here. In 2013, when the green bond market was largely a development bank market, in fact, entirely a development bank market, it was the IFC's issuance of two $1 billion benchmark-sized bonds that cracked open this market and showed to our commercial banks around the world, including HSBC and others, that the potential for huge investor demand was certainly there, and it was worth looking at the commercial sector. By November of that year, we saw the world's first three commercial green bonds. And now we have $1.2 trillion worth outstanding of green bonds in the world. This is an extraordinary growth since 2013. And Pushkala, IFC needs to take a bow for the work they did in cracking open that market. But of course, HSB has been beating the bushes ever since then to ensure demand and to grow an ASEAN and an Asian market, where they've certainly been an absolute leader in the growth in this area. Okay, enough of Jonathan and Pushkala. You'll hear more about them in a minute. I just want to say a couple of words about what's happening here. There are some important developments over the last 18 months. The first important development is, of course, the pandemic. We've had a brutal time. It is still brutal. A friend of mine, Rathin Murray, the eminent Indian economist, is currently in an ICU ward in Delhi as a result of having COVID. I hope he's going to be okay. I don't know. We all have people who have been hurt or have felt the dangers and perhaps even died as a result of this pandemic. It has been brutal, personally, socially, and economically for so many countries. Of course, those countries that have managed the pandemic better than others, Australia, where I am today, Taiwan, Korea, China, Vietnam, have managed to get growth going again to revive their economies and support their citizens at the same time. We have to learn the lessons of last year. What have they done that was right? What have other countries like the UK, France, Brazil, USA done that was so wrong, that has led us to lose so many of our loved ones and the people that we respect? And it's happening still now in places like India, in Germany, in South Africa, and in Brazil, of course, still. You know, the pandemic is not an isolated thing. The Intergovernmental Panel on Climate Change has been predicting that for 30 years now, that there will be pandemics arising out of climate change. This happens in history when we look at climate change. This is, in this case, about pathogens jumping between species, bat colonies that were moved, that had to escape environments, stressed bat colonies, and then the pathogens jump into humans. It's a result of the degradation of our environment from anthropogenic activity, human activity, climate change, loss of biodiversity, and various other matters. We have been lucky, I hate to say it, despite the brutal period we're still in that we had a virus which only had a 1% mortality rate. We've lost a lot of people, but if SARS had broken free, if we had been unable to contain it all those years ago, it had a 20% mortality rate, and mainly hitting 30 to 40-year-olds. It would have been a very different, violent effect on a global economy. We now need to be on our guard. Disrupting the environment leads to different kinds of pandemics. Plague in the 1600s and in medieval times. And in fact, the Roman Empire in the 500s experienced plagues as a result of climate disruption. Understand that this is also about climate, and responding to the pandemic is about climate resilience. We've learned that climate resilience isn't just infrastructure resilience, building up our ports, preparing our agriculture for different temperature ranges. It's also about a health system, free healthcare for all becomes critical if we're to make sure pandemics don't spread. If you're a poor paid worker, you will continue to work when you're sick because you need to have a living and to feed your children. And of course, you will spread the disease, and then the whole society suffers. Free healthcare, social protection measures now become climate resilience measures, not just things that are important in their own right. We have to learn from this. We also have to learn that it's time to listen to our scientists. You know, if there's one characteristic of countries that have managed the pandemic well, it's those that listen to the health professionals early and then acted fast. The ones that didn't for weeks and months are the ones that have suffered most. The same thing applies to climate change. For 30 years, we have dithered. We have listened to our climate scientists and we have said, oh, that sounds very hard. What about we just do this? A bit like in England saying, let's wait 3 weeks and leave the pubs open and see what happens, which is what happened in England. The disease went crazy. Climate change will bite us badly. It's time to not listen to the people who are saying, oh, it sounds very hard. It's time to listen to the science and say, this is what we have to do. We just have to do it. And now let's work out how we get there. I'm optimistic. The Biden Climate Summit last week saw some astounding commitments by many countries. Not only 2050 net zero targets, we have 112 countries around the world now committing to net zero by 2050, but more importantly, 2030 targets. As the IPCC in its 2018 report made very clear, it's the next 10 years that count. If we don't get emissions globally down by 50%, we are unlikely to have a sustainable future for our children. If we do get emissions down by 50%, we have a good chance of having a reasonably stable climate and holding climate change to severe but not catastrophic levels. Of course, we do have to prepare for resilience and adaptation. We need to raise the ports levels in Singapore, in Jakarta. We need to ensure that flood management is in place in the Bangkok area because there will be more floods. We know that. And we have an opportunity because the solutions are known. We know what to do, and we have the capital. We have a world with more capital available than ever before in human history. Much of it in places like Japanese and German government bonds, paying negative interest rate or zero interest rate. What a great way to pay Jonathan or Cedric's pension, let alone mine and Pushkala's going forward. So we need to put that money to work. And what better place to put it to work than a clean, green, sustainable future that gives hope for our children. Opportunity. That gives me hope. And green bonds and sustainable bonds are proof. They are proof that if we create instruments that meet both risk yield requirements and climate change and environmental requirements, investors will invest. They will invest in spades. We have oversubscription rates, large investor interest on every continent, in every major economy. Of course, it's strongest in the largest pools of capital, in Europe, in the US, in Japan, but it's also strong in other areas as well. Asian investors across the board have been keen on this and are coming to the party. Well, that's my story. Let's now see what Cedric found in the 2020 report. One of the highlights, Cedric, of what I'm saying is a proof of concept. Where have we got to? How did we go compared to previous years? And of course, prospects. And then we'll hear from Jonathan and Pushkala going forward. But make no mistake, everyone, this is about creating a future that we need to have, we want to have, and our children deserve. Cedric.
Thank you very much, Sean. Hello, everyone. This report we are launching today is the ASEAN State of the Market Report for Sustainable Finance. We have expanded a little bit our coverage in that before we were only reporting on mostly green bonds and green loans, but given the evolution of the market, it is now necessary to also include social and sustainability bond in this analysis. The market has continued to grow. In 2020, there were $12.8 billion of bonds issued in the ASEAN region. That's about 5% more than in 2019. And that brings the total amount of bonds issued at almost $30 billion. If we focus on the green bonds, first of all, we have seen $9.3 billion of bonds issued, which is more than the $8.8 billion issued in 2019. But what is very interesting is this came out of 75 issuers, which is a big number, which have come to market with 44 green bonds and 31 green loans. Those 75 issuers represent an increase compared to the 39 issuers that had issued by the end of 2019. So that gives you an idea of how many new companies are coming to market. We saw 26 debut issuers coming to this market in the region, including 19 non-financial corporates, 5 financial corporates, and 2 governments as well. So we see a consistent increase in the size and the number of issuers. However, we have to observe as well that this is mainly concentrated in 2 sectors: renewable energy, which make 31% of the issuance, and green buildings, which make 49% of the issuance. Compared to previous year, this is a little bit of a change because in previous year we had a little bit more diversity with, for example, the forestry bond out of Thailand issued by PTT, which increased the land use sector. But we have to admit that renewable energy and green buildings are very key sectors for the transition of our economies. I should add, in terms of the type of instruments, that we have seen 19% of issuance in the form of a sukuk transaction, which demonstrate also the lively state of the Islamic finance sector coming out of Malaysia or Indonesia. If we look at the currency, it's mostly driven by hard currency issuance, 79%. And if we look at the average size, it's mostly issuance below $500 million or equivalent if it's in local currency, with an average around $200 to $250 million per issue. It is actually slightly higher than the global average we see, which stands at $170 million if we look at the global sustainable finance market. So in ASEAN, the deals are slightly larger than the global average. However, we only had one deal that was bigger than $1 billion in Singapore for a commercial property to finance the Marina One green buildings. In terms of the second party opinion, which is a key component driving this market, we must observe that only as much as 40% of the bonds issued had no review, which is not required under the green bond principles, but is an important part of developing the market. So, which means also that 60% had a review or an assurance or green rating when they came to market. So that's for the green bonds. If we move on to the social and sustainability bonds, this has been a record year. We saw $2.9 billion of issuance in the form of a sustainability bonds, and a much smaller $49 million in social bonds, which brings the cumulative issuance at $5.8 billion total. So this is driven mostly this year, obviously by the pandemic, as half of the issuance was clearly earmarked for the response against the pandemic. And also as the sustainability bond principles were issued in June 2019, this is the second year that we see strong growth in that market. In terms of the types of issuers, we see sovereign issuers, obviously, making a relatively big part of this issuer pool, representing 39%, and financial corporations, representing 44%. And these are mostly local currency issuers, representing 60% of the market. And it's relatively short dated and slightly less than $500 million on average. There have been some notable transactions, like the government of Thailand, which came out with a sovereign sustainability bond to finance the response to COVID, as well as low carbon transport infrastructure. We saw an SDG bond from CIMB Bank, quite sizable, in $680 million. We saw sustainability bonds also in the Philippines from Manila Water Development Bank of the Philippines, as well as BPI with their COVID response bonds in local currency for 21 billion pesos. In addition to this market, we have listed in our reports the new types of instruments that are now available for issuers, which are the sustainability-linked instruments, either loans or bonds. We have listed $6.4 billion of sustainability-linked instruments that have come from many countries. Now, these instruments are slightly different because they are not use of proceeds instruments. They are mostly driven by a strategy at the corporate level, plus some key performance indicators or sustainability performance targets, which commit the issuer to achieving some very clear impact. And in that space, we've seen different types of sustainability performance targets. For example, the reduction of carbon emissions, the use of water, or even the number of accidents happening in a year, etc. So this offers the opportunity to issuers to slightly move away from a use of proceeds where the assets must be clearly identified and have a little bit more flexibility on what they want to achieve. And I'm sure this market will be subject to more interest to define exactly what kind of KPIs make sense going forward. But to summarize at the country level, if I can compare some of the countries that make ASEAN, so Singapore is the overall champion in the green lending space, but mostly in the form of loans. We don't see as much of a green bond market in Singapore, but still Singapore represents 53% of the regional issuance. Thailand is seeing some very strong growth, plus the sovereign issuance also is a very good development. Indonesia has seen some smaller growth this year, but there is a strong participation from the public sector, which is a good thing. In the Philippines and Malaysia, however, 2020 has seen a decrease in issuance. And in the rest of ASEAN, unfortunately, we are not seeing yet a lot of activity, except that in Vietnam, we've seen some sizable green loans being closed. But the rest of the ASEAN countries are still looking for an opportunity to participate in that growth. So a very interesting report. It's quite long this year. It's 30 pages long, but it has a lot of information and you can use it throughout the year to refer, if you need data on it. And obviously, we hope that you will find it useful.
Great. Thank you, Cedric. That's really good. I want to first tell everyone the link is in the chat box if you want to download the full report and have a look at it. It's a superb report. Please do have a look. We had a question whether the Climate Bonds Initiative will certify social or sustainability bonds in the future. The answer is yes, but there's a bit of a story behind it, which I want to get to in a minute. But I'm going to leave that as a teaser for you about where we're going in the future. First, I'm going to ask Jonathan, who is across everything in ASEAN. What are you seeing? What do you think the highlights are? And directions in this particular region with issuance and loans, of course, as well.
Sean, thank you. And with those flattering remarks, I should be extremely cautious now. But being very serious, I'd like to sort of echo your introductory comments on just how important and significant shifting capital, shifting investment to address this challenge to shift to a sustainable system is, and the importance of collaboration, not just those of us who are speaking on this webinar, and your huge role, Sean and Cedric at CBI, obviously the role that MDBs like IFC play, but I know that the participants in this, we're going to solve this by working together. And I think what really came out very strongly in listening to sort of Cedric's sort of report card for ASEAN 2020 is just how now we have so many more players coming to market. We have sovereigns, we have the banks, we have the corporates, we have corporates across multiple sectors, we have a range of products, we have the use of proceeds, we have the sustainability links, we have the public markets, we have the private markets, we have the loan markets. So when you, Sean, you referred to sort of a reference point back in 2013, and I remember when you and I met, probably back in 2013, 2014, and the global market at that point was not dissimilar to the size of the ASEAN market in 2020. 12, 13 billion, I don't remember the exact numbers, I'm sure I've got the slides somewhere. But when you look at sort of the relative starting point and what ASEAN now has in terms of that sort of experience, that diverse base of knowledge and understanding and track record, successful track record of bringing capital to this space, when you also look at what's going on much more broadly in terms of underlying economic activity and the capital that is indeed going into the electrification process, the decarbonisation of the energy systems, the making of more efficient of our transport systems, the greening of our buildings. It's the platform for growth is phenomenal. And if that weren't enough, then look at what the regulators are doing, the policy setters are doing in terms of creating the platform. Because I think where ASEAN is now in terms of its thinking around regulations, taxonomies, guidelines, it's way ahead of where the global markets were back in 2013. So I think there's no reason not to suspect that we will see, we're very well prepared now to see almost an explosion of that capital shift to support and back and in itself drive and create that virtuous circle into those critical areas of investment that are needed. So I think, without concluding too early, the look forward is very, very positive. And I'll perhaps pause there because I know you're going to sort of drop into, ask us about some of our sort of favorite case studies. But let me pause there, Sean, because I'm very keen also to get Pushkala's perspective here.
Okay, Pushkala, we'll give him a break for a minute. But thank you, Jonathan. We'll come back to you. Pushkala, tell us what you're seeing and also what the IFC is doing. Given you've cracked open markets all over the place, what can we expect in the ASEAN region?
Thank you, Sean. Firstly, of course, thank you so much for having me here. I think it's a really exciting time to be working in sustainability and green. And as John has said as well, I think we're possibly going to see an explosion the way things are going. There's all the right ingredients and all the right moves have been made. So I think it's just a matter of seeing how this really transpires over the next few years. From our point of view, I think, and going back to this important point about collaboration, seeing this across all levels, we're seeing a lot of interest amongst regulators, and we work across regulators in various markets in ASEAN. I think it's just very, very promising and optimistic to think that they're starting to think about how important it is to have the right incentives, the right taxonomies, to kind of fuel private sector investment and investment towards green. So that's one part of it, I think, which is very exciting. The second is really the kind of issuers coming to market and the scale that we're seeing. And it's not only about the bonds, as you rightly said, but it's also about loans. And it's now becoming a lot more inclusive in terms of products and in terms of players who come to market. So that's the second thing that's very exciting, I would say. The third is really this diversification in terms of asset types and use of proceeds. So although I think everyone kind of thinks of renewables and green buildings as the immediate one, there's just so much more interest now in terms of climate smart agriculture, water and wastewater, and of course, addressing this whole transition space as well, because it brings to the fray a number of other participants who could have never been part of this process before. So I think it's very exciting in that sense as well. And one last thing I would say that we're seeing, which is quite exciting too, is climate risk, because people have now started to realize that clearly the pandemic has had a huge impact. People are a little bit away from understanding that climate could pose similar threats or even more, but people have started talking about climate risk, which I think is good as well. The one, I would say, area of caution in all this optimism, as with any new products or any new markets or assets, is that it's, oh, and there's my energy efficient lighting in my meeting room, which I will try and get on after I answer this question. But I think the important thing is to get it right. We've seen this happen in a number of markets, and where climate has been kind of a niche area, and then it's dampened confidence as we go along because people haven't gotten it right, either in terms of greenwashing or several other factors. So I think we're on the right track as far as that is concerned as well. Everyone's taking it very seriously in terms of how we have credible and transparent systems to ensure none of this happens. But it's important to keep that in mind as well, Sean. In this explosion, just need to make sure that we're heading down the right way as we do it.
And that's the interesting point. I mean, I still remember a speech that Kristalina Georgieva, the managing director of the IMF, made last March, which had the theme "Build Back Better" as central to it. And of course, that's now become a campaign slogan for the Biden administration re-election. It's a campaign slogan for the European Commission as well, and various other governments as well. This is amazing change. We thought in March of last year that there was a good chance we would go backwards on the climate agenda as everyone hunkered down with short term. Now, don't get me wrong, it's not entirely a clean slate. We have seen increases in investment in fossil fuels in different sorts of places. But overall, the rhetoric, as exemplified by the amazing commitments by Japan, by China, by Canada, by the US, by the European Union, by China at the Biden summit, and we understand a forthcoming set of new measures by the Korean government to top their commitment at the Biden summit, are amazing. Like 18 months ago, this didn't look like it was going to happen. So the Build Back Better theme is certainly coming through at the moment, which gives us hope about the idea that economies will turn. Are we seeing it amongst ASEAN governments, though? What's your feeling about this? I mean, I had a representative of the Thai Debt Management Office on a webinar a couple of days ago. He was certainly bullish on the idea. Jonathan, other countries, have we got this narrative begin to be part of it as well?
Yeah, I think you're right, Sean. I don't think the voice that's sort of questioning whether we need to do this and whether we need to change is a very small, quiet voice now. I mean, I think there's broad recognition that we have to do this. And to your point, the number of major countries and some smaller countries who are clearly going out with their commitments to net zero, very strong expressions of intention and ambition. But the question does remain, and we have to be realistic around the how to do it, and how do we build the right signals and signposts and channels to get the capital to where it goes. And I think one of the the key points that I think Push raised there is of course this area around taxonomies and standards, and there has been an awful lot of progress on that across the region, which I think it is my own view is going to be very important that the ASEAN region does form its own view of the right pathways, and also put a strong voice to those pathways, because that's going to be critical to give confidence to all of the players in the region as to what they can and what they should be investing in with confidence, and at the same time then take that investment story, that transition story, to the markets. Now that's easy to say, but not so straightforward to deliver upon, because in the context of saying, and this is where there's been phenomenal leadership from Europe and the groups you're obviously involved in, Sean, around sort of, I think, setting out the frameworks. Let's get beyond sort of arguing which core taxonomy should be used. Should we use NACE or SIIC or whatever? We need to break economic activities down. We need to identify the potential impacts across those, and then we need to start setting thresholds. But I think where the Asian voice, I think, is going to need to be found, and I think this is why some of the market soundings that MAS are driving and other regulators as well are supporting around, well, how do you actually start to set the standards today, the thresholds, for investment in Asia that do reflect the specifics of the locations and the resources of where those investments are going to take place. And there will inevitably be some discussion around that, because what you might do in one part of the world may not necessarily be, what you're going to do in a different part of the world. But clearly, the common ground must be that we can't just, as if we think of sort of the emerging Asian nations, say, well, we just need to do the old stuff to sort of catch up. No, it needs to be very much thought through as to, what are the opportunities, what is the pathway, what is the best effort, and once you've done that analysis, then to go out and credibly communicate that. And I think that's where we're now getting to. ASEAN Capital Markets Forum doing a lot of good work around that, bringing together that work. And I think that's going to be critical to signal to the markets where we want to see investment going, to eliminate that this sort of big zone of uncertainty, which might be part of the cause why some issuers are a little bit cautious to go into the market, because they don't want to be picked on, well, you're on the wrong side in that zone of uncertainty.
It's certainly true that we need to make it easier for people to know whether in or out and come to market as part of the process. That's the objective of taxonomy work.
Yeah.
And the objective of sustainable finance roadmaps. As you said, Asian Capital Markets Forum of Regulators is doing a good job, and they published the Sustainable Finance Roadmap earlier last year, which included a big discussion about transition, which is a feature of economies in the region, looking at how to transition their economies, not just to the deep green stuff, but to take high carbon, to shift to low carbon, and so on. So, which is good. That's part of the discussion. That's a feature of the MAS taxonomy. Of course, Pushkala, this has been a discussion topic at Sustainable Banking Network that the IFC organises for some time. I've presented at Washington, DC meetings, but it's advanced a little bit in ASEAN now amongst some of the members of the SBN, hasn't it? Can you give us a bit of a flavour of what you're seeing?
Yes, Sean, it's been an excellent platform, I must say, and there's been so much activity in the last 15, 18 months around green sustainability. I think three examples which really stand out in the region are Indonesia, Philippines, and Mongolia, for instance, and they're all very different markets at very different levels. So that's why it's really interesting as well. With the Philippines, it's, they've been leading the way like Thailand in a number of ways as far as green is concerned, very committed to this. One of the first, I would say, regulators starting to think about climate risks, starting to think about how to scale up newer areas of green as well. So we're doing a lot of work with them. We have a 5-year program now with multiple partners, including IFC, called the 30 by 30 program, which is basically 30% climate by 2030 and, of course, zero coal. So we're working with multiple partners to make that happen. So that's one part of the work we're doing with the SBN. The second is in OJK in Indonesia. So this has been a long process as well, but it's about building taxonomies and guidelines that make sense. So it's, I think, to the point that was made earlier as well, we have to see what's relevant based on which market we're in and where it makes sense, or which sectoral taxonomies are needed. So with Indonesia as well, I think there's been a lot of commitment amongst regulators. Been quite a lot of work, which also led us to one of the first green bonds that we anchor invested in, which is the OCBC one in Indonesia, able to demonstrate to the market that this is something that's viable and doable. And Mongolia, interestingly enough, is one of the most active members of the SBN platform. Lot of interest, lot of potential. We're working with them in terms of building guidelines and taxonomies. Clearly, there is an interest to scale green as one of the highest levels of pollution, as everyone knows, is a very coal-based economy. So there's a lot of work that goes in at the regulatory level. It takes time as well to incorporate these taxonomies, these guidelines, which are market specific. It's also about socializing this concept with the private sector and with FIs or corporates in terms of how this would benefit them or what it means for them. Because I think it's important not only to have it at the regulator level, but just to kind of bring it down to see how it makes sense for actual issuers and actual players in the market as well.
No, very good point. We need to, but nevertheless, the fact that regulators are moving and have been providing guidance and are looking to do more guidance is pretty exciting. There's no doubt that the commoditization of rules and guidelines will grow markets, as it does all bond markets, the more we can have common language across it. And it's worth noting for our listeners that the European taxonomy that was launched on the 21st of April is going to regulation, will govern both the sustainability reporting of investors, banks and corporations, as well as the green bond market. But the Chinese taxonomy, which has been updated on the same day, deliberately, on the 21st of April, as a signal to the world that China and Europe are working together. And we do have a harmonization work group looking at bringing those two taxonomies closer together, has also moved in line to the European one in terms of announcing it excluded coal, which was a feature of the old taxonomy, supercritical coal, and some other measures and changes. So in terms of a backdrop, a global backdrop to what ASEAN is looking, things are really moving. And of course, the scope for ASEAN to harmonize and synchronize with other parts of the world to ensure that capital flows freely between different markets, because we want to not only increase local capital allocation towards sustainability, but also bring in international capital. But a question to you, perhaps, Jonathan. 50% of local issuance is local currency, which is really cool, right? How much of the demand you're seeing is in fact local versus offshore? What's your reading of the situation in the different markets we have?
Yeah, well, I was just going to, maybe just before answering that, Sean, I don't want to disrupt your flow, but just to perhaps put a marker down for while we were focusing on public sector and policy and regulation. Of course, in addition to that, there's the leadership by example. And I think, again, in ASEAN, we now we have Indonesia with its program. We've got Thailand out in domestic currency, and I'll come to that. And of course, with the benefit of hindsight now, we could, put ourselves back in 2020 and predict Malaysia, of course, will come to the market in early 2021, which they have done with their sustainability sukuk. So I think those are, and you can see in all of those markets how that has then triggered follow-on investment and confidence in the market, tapping into this sort of, huge pent-up demand of institutional capital globally and locally to back these sustainable investments. So, I mean, your point on local currencies, I think, in a sense, we shouldn't be surprised, because in the markets across ASEAN where you've got those sort of, deep pools of domestic currency, held as, the sort of savings pools, as it were, in Thailand, of course, in Malaysia, and I don't know quite where Singapore, not really a local currency, more of a regional, sort of regional plus currency. And so I think it's natural that we've seen, smart issuers say, well, we've got sort of, that sort of long real money sitting there. We should be tapping into that and, creating the investment, the sustainable investment opportunity for those domestic currency savings to be put to work. And to your opening point, Sean, I mean, where would you want your pension monies to go? If it isn't to support your local champions funding a sustainable, low carbon, better future in the country that you care about, you love, and you want to support. So I think it's therefore very natural that we've seen the sustainable markets really grow in the domestic sense, or the domestic currency portion of those markets grow very, 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 very significantly. So I think to me, it's just markets working pretty efficiently that we're seeing that happening. And I'm quite sure those will still remain. And as those pools of, hopefully, as development grows, savings pools grows, we'll see more and more of that again directed into domestic sustainable infrastructure and other investments.
So that's a very cheery suggestion that you've got there about a variety of investors. Pushkala, you've always had a philosophy of crowding in private capital behind the IFC. What's your reading of this question in terms of the kind of reaction you're getting from different sources of private capital about what's going on? And how strong is this demand?
No, I think it's a really good question. I think there are various ways of looking at it. Clearly, we're seeing a lot more interest in Asian markets or the ASEAN markets than we were previously. So that's one part of it. But that's also, I think, investors are finally after yield more than anything else, right? So in terms of currencies and their performance, I think it's a confluence of looking at thematic areas where clearly you have a lot of offshore investors who are interested. They drive most of the demand, I would say. And you have the investors looking for yield. And when you compare it with the regular or normal G7 currencies, and you compare that with the local currencies that you have in ASEAN at the moment, they're definitely, I would say, performing better as well. So I think it's a combination of factors that's leading to this. Clearly, most of the investor demand is coming from foreign investors or offshore investors as compared to domestic. But probably that's going to change as well, as Jonathan said, as we progress.
Is good. I mean, certainly we've had on our webinars in terms of foreign investors, people from State Street, from BlackRock, from Manulife, from Allianz Bernstein, and various others who have actively said they're looking for green and sustainable bonds from the region. So we've got that, and there are more. But it's that exciting idea that there's a really deep pool of local investors who want to move in this, not just Temasek and GIC, but others as well in the area. That's exciting in terms of providing the opportunities. So what about the other countries? You know, we've got the big markets driving this, but let's talk a little bit more about Vietnam. And then do you see any opportunities for Cambodia, Laos, maybe even Myanmar once things settle down to take advantage of this? Or is this just too long a bridge? Perhaps, Jonathan, you kick us off on this question.
Yeah, well, I mean, obviously, you know, Vietnam is making some positive strides, and we've seen most of the banks come to market, a couple of corporates, but it's still very early days, of course. Clearly, in getting access to the international markets, when you sort of drop, materially below the sort of the investment grade hurdle, it becomes much more challenging. And in a sense, the traditional strength, I would say, of the green bond is in the high volume, high rated, where investors will, really value the label, the robustness of the product. And that's where we're seeing, that's where we're seeing the very strong results of, oversubscriptions, lower, driving great outcomes for issuers. And then, of course, I think in some of the smaller markets, we also have to be just cognizant of how sovereign finances, of course, have been challenged by COVID. And, looking at sort of data across markets around how sort of debt to GDP ratios have inevitably risen in some of those markets. These are going to be big challenges, I think, in these markets, as to sort of, we're going to need to, I think, be quite creative. And I think IFC is going to be absolutely, and has been at the forefront of this, of sort of creating or providing some of the risk appetite in some of those markets that are going to need a helping hand to, raise the capital they're going to need to bounce back, as it were, Sean.
Look, that was a beautiful segue across the Pushkala, because, of course, that is the IFC's raison d'etre in some ways, bringing folks into capital markets. Do you see green shoots in these markets? I mean, you've already talked about Mongolia, a small market where we clearly have strong green shoots, but in Laos, Myanmar, Cambodia?
Maybe not so much in Myanmar, but Cambodia and Laos, definitely. I don't know whether we're still talking about Vietnam, but yes, Vietnam there's a lot of activity as well. And we have done now something jointly with CBI, with the Securities Commission. So definitely Laos and Cambodia. But, I think, as Jonathan and you have rightly said, it's going to be a combination of factors that's going to bring green as kind of mainstream in these countries. It's not only financial products like credit enhancements and, say, risk share facilities or anchoring some of these transactions, which we've done in a number of markets, and that's helped kind of kickstart a lot of the green bond issuances or green loans, for instance. But it's also, as we said before, it's a combination of regulation, taxonomies. And I think one question that we get asked very often is, I'm keen to do green, but I have no idea what kind of assets would qualify as green or how much there's available to do it. So it's also about finding that critical mass of green assets or projects that gives confidence in terms of scale. So it's definitely multiple factors. So having the right regulation guidelines, which are transparent, which are predictable, having the right kind of financial products, depending on which market it is, especially if it's niche or early stage, and also ensuring that there's the right mass of projects, verifiable, impactful projects, I think would be key for these markets.
If I may say
Let's talk about
Sean,
those projects for a minute. Oh, sorry, go ahead, Cedric.
We see some questions from participants asking whether the SMEs, for example, could benefit from this trend. And that would be something maybe that, Jonathan, you could answer to. Are banks maybe the right conduit to issue green bonds on one side and then on lend to SMEs?
Yeah, absolutely. I think you've set up and 90% answered the question yourself there, Cedric. I think this is where the loan product really comes into play and why it's really important that, and certainly the work we've been involved in with the loan market associations, we've been very keen to align the loan green lending principles to the green bond principles so that the financial big banks or all of the banks as intermediaries can, fund on the left-hand side and make with green bonds and on lend, very effectively green loans. And we are seeing, very significant pickup in use of the green loan product into SMEs and in both formats, both the sort of the use of proceeds format and of course in the loan market. And I think this is, you can see this very much in your report, Cedric. A lot of that loan is coming in the sustainability linked format because of course in the loan market, the benefit, as it were, to the borrower is, in contrast to the issuer who has to say, well, I'll accept a penalty if I fail. In many of the loan deals, the borrower can say, well, I'll get a margin step down if I succeed. So there's been a lot of work being done across all of the ASEAN markets by, the banks who are active in there, pushing out those products, trying to get them more, a little bit to Sean's earlier point, sort of programmized, so that the costs of review and assessment of the KPIs and the targets can be done efficiently, such that that product becomes very relevant and efficient and applicable for the SME sector. So yeah, absolutely. I mean, SMEs, the capital needs to get throughout the system. SMEs have a huge role to play, whether it's as in their energy usage or the technology that's driving componentry for larger machines and so forth, which in turn are critical to the efficiency of many of the processes that we rely on as a society for development purposes.
I wanted to switch to transitions for a minute. We've had a couple of questions about types of sectors, and Pushkala, you talked about the developments looking beyond renewable energy and buildings, green buildings. Of course, for those people who are asking about green buildings, remember that 40% of the emissions reductions we have to get in the energy sector come from the built environment. So we need energy efficient buildings to avoid fossil fuel power continue to being a significant part of the mix until such time as we get to clean energy. So there'll be a lot in this area. But transitions, I've been on sessions recently where Sri Martini from Pertamina was talking about Pertamina issuing a green bond. I've heard PLN talk about their interest in looking at doing a green bond or possibly a transition bond, which is a similar theme, just focused on a high carbon company. There seem to be plenty of opportunities for both use of proceeds bonds, like a green bond, transition bonds, which might be investing in stepping stone investments like retrofitting gas pipelines to make them hydrogen ready, or entities who are looking at a corporate strategy for 2030 or so on that's appropriately ambitious around the world. Are you seeing them locally? I know we've seen regulators talk about it, but is it just Pertamina and PLN or is it across the region? Pushkala first. How's the conversation going that you're having?
I think there is a lot of conversations around this, and a lot of discussions around this. And I think with the taxonomy that we saw kind of coming out of Singapore as well, this has also kind of helped bring this to the forefront with a lot of regulators who started to ask questions about transition and what it means for them. But I think there's also a lot of ambiguity around this. So we have the ICMA Climate Transition Finance Handbook, which came out in December, but that's very broad in terms of talking about disclosures and guidelines. People want to know about actual projects and thresholds and efficiencies and how that would work. So there's still really no kind of standardized approach towards that. And I think a lot of the countries and the stakeholders that we're speaking to are trying to wrap their head around what it means for their business. If it's an FI, what it means for their portfolio. And if it's at the regulator level, then what it means in terms of sectors where they have the most emissions within the country. So I think there's a lot of interest around this, but there's also a lack of a standardized approach in terms of how to address it. And that's purely on the transition side. But sustainability linked is also getting a lot of interest as well. Mm-hmm. And clearly, of course, I think, one of the things that we're looking at as an organization is trying to see how to link some of the KPIs under SLB or SLL to decarbonization and transition. So not that it only covers, say, social or governance or SDG related KPIs, but also kind of comes back to decarbonization. And here again, I think the challenge is how do you set those KPIs that are acceptable in the market or acceptable depending on type of project. So short answer is yes, a lot of interest, but I think people and just stakeholders would benefit a lot from having an approach. And I think it's definitely not very easy. It's not like a user proceeds approach, but I think there's a lot of ambiguity at the moment.
So we're 55 minutes in, Sean. I think it's time for a question for you on this topic, because you're right. There's a really vibrant debate around exactly as Push has described. How do we do this? So if you've got, and I won't mention any names because as I say, there are real live conversations going on here. If you've got a profile and you rely a lot for your energy systems on fossil fuels, and you've got a program that is saying, we know we need to transition, we've set some ambitious renewable targets, but we've still got a profile because of our growth where we're actually going to be burning more fossil fuels for a period. And then we've got a curve that's going to turn over as we start meeting growth from renewable investments, and then it's going to start to turn down as that incremental renewable starts to displace the existing fossil fuel generation. But we don't quite know where it lands because we're earlier in our journey. We can't see 50 years into the future or a long way into the future. We can only see so far in the future. We don't know where it's going to land, but it's probably, the Chinese have probably the best eyesight of all because they can see to 2060. But this other ASEAN country doesn't quite know where it's going to land. And they take that story to market and say, we're funding the transition investments with this piece of capital, which is going to go to the renewable piece that will transition. Is that going to get supported? When you write your blogs, Sean, what are you going to say about that? Is that going to work for you?
So he's a very cheeky panelist, isn't he, everyone out there, turning the tables on me like this. But thank you for the question. There's a couple of key principles here. Time is short. 10 years, folks. 10 years to get emissions down 50% globally on average is what the IPCC says. Yes, we have different starting points, which will mean different trajectories. The key point is decisions about what need to be done, about what is the right thing to do to address the challenges are science-based, not policy-based in terms of what we think we can do. We start with what's necessary and then we work out how to do it. Now, it doesn't mean that all countries will magically adopt the perfect policy. In fact, I don't know of any that's magically adopting the perfect policy, but let's at least ensure that the policies that are called sustainable are consistent with what the scientists say. That's my key point.
Yeah.
And that applies in every country.
Because on that, Sean, and this I think is the crux of it, because you're right, but then we have to recognize the limitations of science. Because science can tell us, or climate science can tell us, a global carbon budget to stay within 2C or 1.5C with the relevant probability. But what climate science doesn't tell us is how we should allocate that budget between, I don't know, having more televisions to entertain us, or building a new theatre or a museum. And climate science doesn't tell us how that budget then gets allocated to a person here or a country there or a region over here, because that isn't climate science. So when we say science-based, yes, but we sort of have to recognize the limitations of where science takes us. And then there's sort of human influence or politics, whatever you want to call it, that also has that role to play in the debate, as it were, of the budget allocation.
Yeah, it's true, but we have to be tough. I mean, the truth is we have failed so abysmally in the last 30 years that the emissions reduction just on that side of it, just before I get to climate resilience and climate adaptation, is so steep that we're in a very difficult position. A whole lot of options that were there 5 years ago have vanished, thanks to the changes of modelling, thanks to what we have failed to do over the last 30 years. Coal, gas, these are now deeply challenging, whereas gas a few years ago wasn't challenging, and I hope that wasn't an editorial comment, Pushkala. But so we've got to look at this issue in a science framework and be tough on ourselves. Truth is, it's one atmosphere, one world. So the question is, how can we help each other do the ambition that is absolutely necessary now? China is pushing for the whole vehicle fleet to go electric. That's the right thing to do. Yeah. That will happen across ASEAN, and they will drive it. Solar is becoming so dirt cheap around the world. It's actually becoming negligent financially if you invest in new fossil fuels, I'm going to argue. So there's a bunch of things that are really changing. Most of the decisions we're making about investing in fossil fuels, especially coal in the region, are based on two flawed ideas. Discounted capital from Korea, China, and Japan. And you noticed last week at the Biden summit that evaporated because Korea and Japan have now stopped doing that and China is withdrawing. And 20th century concepts of water transition fuels that are not in line with what the science is saying. Now, that doesn't mean we won't have to sweat our assets, that we need to, and we need to reduce emissions in those. And the scope for transition bonds there, by the way, around fossil fuel, and I'm not so sure about coal, it's a bit more complicated, but certainly in gas, as we drift towards 2035, the issue about new investments is vexed. Now, we need to look at regional profiles. That science work has actually been done. I spoke to the principal of the Global Carbon Project recently, and also the Future Earth Project, the collection of climate change research centers around the world, has done modeling that we can reference here. We just haven't referenced yet. So we're looking at this year. We will expect to roll out industry-specific trajectories that need to be achieved to meet the Paris Agreement in steel, in cement, in existing oil and gas, and other areas. And then that gives us a framework to look at the corporate strategies of companies. Are they ambitious enough? And we need to know what minimum ambition is. If Volkswagen builds a diesel plant outside of Augsburg, they say 15% emissions across the car fleet. Sounds really good, right? Decarbonisation. Actually, transport is 25% of global energy emissions. It needs to improve much more quickly than that. By building diesel, they are stopping the building of an electric plant, which is what's really needed. And so you've got to need to understand the trajectory of transport to be able to assess the Volkswagen corporate strategy. Luckily, Volkswagen is actually building electric, not diesel. But diesel would be a mistake. That same argument about necessary ambition needs to happen in every market. And that's something that the taxonomy board, being set up by central banks in ASEAN, will be examining with the help of the Sustainable Finance Institute of Asia, headed by Eugene Wong in Kuala Lumpur, going forward. This discussion is real, but I'm not going to have a definitive answer about what the end result looks like, because you're right. There are regional differences we have to take into account, but it's not a blanket. It cannot be a blanket. It's a crime to say a blanket, oh, we have a right to have emissions. There's no such thing as a right in one world, one atmosphere. There's a what we need to do to make the change, and how do we get there? And I'm saying to the rich world, you have to pay for this to a certain degree. You've got to provide discounted capital for the emerging markets of the world to allow them to go green. And we're seeing that already. The Germans have been fantastic in offering concessional finance for a number of markets around the world if they choose a green path. We want to see more of that in the coming year, and we will see more of it, and that'll make the decisions easier at a country level. So it's challenging, but it's necessary, and the debate at least has begun. There you go. That's my rant over. Folks, we're out of time. Oh, God, we've got another couple of hours to go on this, but we need to wrap up. I need to ask for a final comment, a last word. I'm going to actually ask Cedric to kick us going because he's been suspiciously quiet for so long. And then I'm going to ask Pushkala and Jonathan to wrap up the future, what it looks like. Is this here to stay, where it's going? Give us a few words of direction and hope. Cedric first.
Thank you, Sean. So the ASEAN market is definitely very active. In 2021, we're already seeing signs that there will be more issuance going forward. The governments around ASEAN are pushing through some very ambitious stimulus packages. We've seen the Green Plan 2030 in Singapore. We've seen Thailand with many projects, the Philippines with many projects as well. Indonesia is pushing out some national recovery program as well. So we are very looking forward to this market this year. Growth is here. It needs to continue and to accelerate. And the market itself is well organized. The standards are here. So we believe that we are set for more growth in 2021.
Pushkala.
I think we have a very, very different market now, even compared to, say, 2 years ago, 3 years ago. There's no better time really to be doing sustainability or green. It's not a luxury anymore, it's a necessity, and we have all the right ingredients to make it happen. It's also not so complicated to do climate. I mean, we have systems in place, we have everything in place. It's not like what it used to be. So I think it's going to be very, very exciting as we have more stakeholders coming to the table. And I think ASEAN is clearly going to lead the way as we go forward on green. So very, very optimistic, and it's a very exciting time to be in this space.
Fantastic. Thank you, Jonathan.
Difficult to follow that, Sean. So we've got the foundations. Cedric and Push have explained that very clearly. We have to challenge ourselves. We have to seek, as you say, for that, identify what is that ambition. We have to work extremely hard on that analysis to make sure we really are picking the smart options and we're not distracted by subsidies in the system. And then I think as a region, we have to work to communicate that commitment, those plans. And if the region and the players in the region do that successfully, certainly from our experiences in the broader capital markets, capital will be just so eager to come and support that plan, that story.
Fantastic. Thank you, HSBC. Thank you, IFC. Thank you, Pushkala Rattan. Thank you, Jonathan Drew. Thank you, Cedric Brimo. Thank you, everyone who joined us on this panel through YouTube, not Facebook at the end, and through Zoom. We've got a lot of work to do. At Climate Bonds, we will be bringing to market certification for transition bonds and transition strategies over the coming year. We will also be bringing more certifications for adaptation and resilience investments, a critical part of the ASEAN story. And that will include social and sustainability in the framework of It's About Climate Resilience, including health investments. As I said earlier, post-pandemic, understand them as also about climate resilience. So that's how we're going to do it. Watch this space, but above all, watch this space as ASEAN issuers take fire. It's going to be an incredibly exciting next 12 months. Please join us next time and join me in my incredible thanks for the participants on this panel, Pushkala, Jonathan, Cedric, and for everyone who produced this magnificent report. Remember, we only have one future. It has to be the future we want for our children. That's clean, green, and sustainable. It's only a matter of how to do it and how to do it fast. Thanks, everyone. Over and out.
Thank you.